Hello. Today we're analyzing Danaher stock. Danaher stock is currently trading at $199.80 level. The current Relative Strength Index, RSI, for DHR stock is at 60.8. This level indicates that the stock is neither overbought nor oversold, as it sits comfortably within the neutral zone between 30 and 70. While it is approaching the overbought threshold of 70, it has not yet crossed that critical mark. This suggests that there is still room for potential upward movement without signaling an immediate reversal. Traders often interpret an RSI above 60 as a sign that the asset is gaining strength, although caution should be exercised as nearing the overbought territory could lead to profit-taking or a correction if the momentum shifts. Moving on to the analysis of moving averages, we see the current price of DHR stock at $199.80, which is positioned below both the 5-day moving average of $199.85 and the 10-day moving average of $199.97. This indicates a short-term bearish trend, as the stock is not able to maintain prices above these averages. However, it is worth noting that the current price is above the 20-day moving average of $199.80, which might suggest that while the short-term trend is weak, the longer-term trend could still be intact or possibly bullish. In technical analysis, when the shorter-term moving averages cross above longer-term averages, it can signal a shift in momentum, so traders will be watching for any potential crossovers that might suggest a reversal in price direction. Examining the MACD, we find that the MACD line is at 0.567, while the signal line is at 0.479. This positive divergence indicates a bullish momentum, as the MACD line is above the signal line. This crossover can often serve as an early warning for traders to consider entering positions or increasing their holdings. The strength of this signal can often be confirmed by examining the distance between the two lines. A wider gap generally suggests stronger momentum. With the MACD still positioned favorably, it appears that there is potential for continued upward movement in the stock. Turning our attention to Bollinger Bands, the upper band is at 201.15, the middle band is at 199.08, and the lower band is at $197.01. The current price of $199.80 is comfortably situated below the upper band, indicating that the stock is not yet in an overbought condition. The distance between the bands, known as the band width, can provide insights into volatility. In this case, the normal width of the bands suggests that the market is experiencing average volatility. However, if the price begins to approach the upper band, it may indicate a squeeze, leading to potential price moves either upward or downward as volatility increases. Volume analysis reveals that the current trading volume is 479,429 shares, which is below the average volume of 526,229 shares. This lower-than-average volume may suggest a lack of strong conviction among traders, which could impact the momentum of price movements. In the context of the daily change of 0.18 or 0.09%, it seems that the current downtrend is not supported by significant trading activity, which can sometimes signal a potential reversal if volume begins to pick up in the opposite direction. Identifying key support and resistance levels, we see that support is established at 189.81 hard and resistance at 209.79. The proximity of the current price to these levels is critical for traders. Should the stock price approach the support level and fail to hold, it could trigger further selling pressure. Conversely, if it breaks above the resistance level, it may lead to a surge in buying interest, potentially pushing prices higher. The strength of these levels can often be gauged by how many times they have been tested in the past. Frequent tests can weaken a level and increase the likelihood of a breakout. In concluding our analysis, it's important to explore possible market scenarios. A bullish scenario could unfold if the stock manages to break above the resistance level at 209.79, particularly if supported by increased volume and positive MACD signals. This could attract additional buying interest, leading to an uptrend. Conversely, a bearish scenario might arise if the stock approaches the support level near $189.81 and fails to hold, especially if confirmed by rising volume on the decline. This could signal a more significant downward trend, prompting traders to reassess their positions. Risk management will be crucial in either scenario, as traders should establish stop-loss orders to protect against unforeseen volatility. In summary, the outlook on DHR stock is cautiously optimistic, with several indicators suggesting potential for upward movement, but traders should remain vigilant of the bearish signals that could materialize should the price fail to hold above support levels. The interplay between the RSI, moving averages, MACD, Bollinger Bands, and volume patterns will be essential in determining the next direction for DHR stock. Monitoring these indicators closely will provide traders with the insight required to make informed decisions in this dynamic market environment. This analysis is for informational purposes only and does not constitute investment advice. For more content, please like and subscribe to our channel.